One of the biggest questions we get is how to analyze a rental property to make sure that we're getting a good return on our investment. We use a tool called Zilculator to help us analyze our rental properties. And I'm going to walk you through step by step on how we do this. It's real easy. You go to new property. Once you click on new property, you can analyze three different types of deals. You can analyze a rental property, a fix and flip, and a wholesale. We're going to do a rental property, right? This is a deal we're about to purchase. I already analyzed this, but I'm going to walk you through on using this tool on a live deal. Now, put in the address, it'll be 2319 Ollie Drive in Macon, Georgia. Once you put in the address, it'll pull up any data that is out there, usually off the tax assessor's website. It'll give you the year built, the square footage, beds, and baths. You can actually drag a photo from the tax assessor's website. Then what you're going to do is you're going to go to the next page, which is the purchase information. So we have this property under contract for $105,000, right? We ran comps on the property, and the property is worth unconservatively $135,000. The closing costs, this is what the attorney's costs would be, right? Not factoring any finance costs or anything like that. So the closing cost on this is going to be $1,500. That's a roundabout number. There's no repairs needed to the property. Now you have two options. Either you can purchase this property in cash or finance it. We're going to be leveraging this property, right? We're going to be putting 20% down. We got this bank through our local community bank where they give us a 20-year loan. It's a business loan they loan to LLCs. The interest rate on this property is going to be 6.75. The loan fees, what this bank does is actually let you finance the loan fees. And people might ask, why would you finance the loan fees? It's because you let the tenants pay for the fees, right? So what you're going to do is you'll finance the loan fees. So the loan will be a little bit higher. The rent for this property. Now, there's a tool called Rent-A-Meter, and it's going to give us the median rent is $1,200. This is a really big property though, so we can charge a little bit more. So it's going to be $1,265. Now, this is one of the most crucial things about rental properties is the expenses you have every month, whether you're managing the property yourself or you have a property manager. Now, one of the biggest things you want to put in there is vacancy rate, right? Now, what is the vacancy rate? That's the time that the property might be vacant throughout the year. This property is rented, but if it went vacant, right, then you would have a period of time to get it re-rented. So we like to add 5% vacancy rate. Now that's, if it doesn't go vacant and stays rented, that's just more money in our pocket. If you use a property manager, we self-manage our own properties, you would add 10% there. There's no utilities on this property because the tenant is going to pay all the utilities. The insurance on this property is about $900 a year. Repairs. The older the house is, the more percentage of the money you want to put towards repairs. This is a little bit older house. You want to put 10% towards the repairs. The property taxes on this property are about $1,000 a year. It will go up. Other expenses. Now, if you had any other expenses like lawn maintenance or trash, you would put that in there. We actually have a trash expense from the city, and it's monthly, and it's $20 a month. Now, future expenses. These are things like, hey, am I going to have to maybe replace the AC in 5 years? The roof, water heater, major things, deferred maintenance that could come up. After analyzing this property, there was no deferred maintenance. It had a newer AC, the roof is newer on it, and the hot water heater was placed a year ago. Then We're going to go into the calculation method for this. This is where you're going to resell it. Now we're going to hold on to this property at least 6 years. It's going to add the sales costs. We'll do appreciation. Now, with the appreciation, we did a very conservative 3%. We analyzed the deal. It's going to pull up all the numbers for us, right? So this property with a cash-on-cash return of 14%, which means the money that we invested, the down payment that we put on this property, our cash-on-cash return is based on that. The rent of this property is $1,265. Monthly cash flow is $265 a month, right? Purchase price of $105,000. It's got the purchase cost, which is the attorney's fees. We're financing $84,000. We got to put $22,000 down. Now, what I love about this tool is it gives you your financial analysis, right? Your returns, right? Cash on cash return is 14%. The overall return on this property is 28%. Capitalization rate, which it explains is the ratio of operating income versus the value of the property, this is 8%, right? You go down some more, it's the financing on the property. Now, here's another thing you can add into the investment. Each year, the renter, the tenant, is paying towards the principal of the property. So in the first year, the principal in the property, they paid $2,057 towards the property. The second year, $4,200. The third year, $6,000. On year 6, that tenant is paid $14,000 to the principal of the property. That's like getting free money because the tenant is paying the mortgage payment. So you'd add that into your investment. It also gives you some income schedules here of where you can see the rent could be in your cash flow after taxes. Now, then it breaks down the actual profit on the deal for you and what you're actually going to make. So your investor cash outlay, your sales proceeds before taxes, $82,000. The outlay, $22,000. Net assets, $59,000, right? Average annual gain after taxes, $12,000 a year on a $22,000 investment. That's what we put down on this property. This is one of the main reasons we love rental real estate, because it's a long-term investment. When you hold on to it long-term, you can create true wealth. Stay tuned for some more videos on how we analyze rental properties, and we're going over from single-family homes to multifamily properties. You guys have a great day. Follow and subscribe to see more videos from us.